Hello, and welcome to Module 7 of the Forex Complete Solution Basic Trading course on Fibonacci numbers and retracements. Leonardo Fibonacci was a famous Italian mathematician. He discovered a simple series of numbers that created ratios describing the natural proportions of things in the universe. The ratios arise from the following number sequence: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and so on. The series of numbers is derived by starting with 0 followed by 1, and add 0 to 1 to get 1, then adding the second number to the third number, so 1 plus 1 to get 2, and so on. After the first couple of numbers in the sequence, if you measure the ratio of any number to the succeeding higher number, you will get 0.618. An example would be if you divided 34 by 55, you will get 0.618. If you measure the ratio between alternate numbers, you will get 0.382. An example would be if you divide 34 by 89, you would get 0.382. These numbers are called the golden mean. Now, that was just a short explanation of the Fibonacci number sequence. Your charting software will calculate these figures for you, but it's just good to get an idea of where these numbers come from. We use Fibonacci numbers as support and resistance levels. There is a self-prophesizing nature to a Fibonacci number, as many traders are watching these levels and will trade off the Fibonacci numbers. The Fibonacci tool works best in a trending market. The simple premise when using a Fibonacci retracement is to buy a Fibonacci support level in an uptrend, or to sell a Fibonacci retracement at a resistance level in a downtrend. So plot your trend alongside your Fibonacci retracement to gauge which way the market is trending. This will help spot potential support and resistance levels. So we'll pull up a chart now and show you how to plot your Fibonacci tool. Okay, so we have our pro real-time chart here, and we have a weekly chart of the USD JPY, it's the US dollar, versus the Japanese yen. So I'm going to show you a Fibonacci extension, which is in an uptrend, and a Fibonacci retracement, which will be in a downtrend. So we show a Fibonacci extension with the USD JPY, which is in an uptrend. So again, this is the pro real-time charting software, but most charting packages, if not all these days, will have a Fibonacci tool. So on pro real-time, our tool is here. This is our Fibonacci tool. We will plot it onto our chart. Now, the first thing to identify when you're plotting your Fibonacci tool for an extension, i.e. in an uptrend, is to identify a swing high with a candlestick with at least two lower highs on both sides of it. Okay, two lower highs, right and left. So over here we have a swing high, and we've two or lower highs. So we're looking for a swing high off our bottom, because when you're placing your Fibonacci tool, you want to do it at significant levels, okay? And generally, it will work on most time frames. But if you're trading, for instance, any amount of time, it's better to get a longer view of the markets, okay? If you're putting a Fibonacci on a 5-minute chart, it won't hold as much weight as if you put it on a weekly chart, which will support your uptrend and support your support and resistance zones. So again, I'll just place it at a valid point. So our valid swing high, again, identify a swing high with a candlestick with at least two lower highs on both sides, left and right. So two lower highs. We have our two lower highs here. So we pop on our Fibonacci tool and we find a bottom. Okay, the market has trended. It's in a sideways trend here at the bottom. So we'll find a bottom. It doesn't have to be exact, just pick a bottom off a candle, okay? And this is close enough to the bottom, and place it on our swing high. Now, on pro real time, to get an exact figure, we can go to configure, and we can configure our Fibonacci. So to get the exact high, we can see the high there is 12,585 and the next one is 12,566. So we'll go with 12,585, which is our high. So we can pull back down here to get an exact figure. So we can just change it to 12,585 and 0.00. And to get, we'll close it there. And to get our swing low, we have it there at 7,649. So just to double check, that's the bottom of the candle. And we have it there. We can just change it there on the bottom to, here we have it, just to get the exact figure. So we have a low point here at 7,649. So we can change it by configuring the chart and just put it, instead of 4.3, we can get it at 7,649, just to be exact. 7,649 and 00 and close. So we have our exact point. We have 7,649 at the bottom and our swing high here up above at 12,585. So that's how we configure our Fibonacci tool onto our chart. And again, we don't need to calculate these figures. Your charting software will do it for you. Okay. So the charting software will calculate those figures for you. So always remember that the Fibonacci numbers are another technical tool. They will never be a 100% guarantee of success. We are looking as traders to put the odds of a successful trade firmly in our favor. Okay, levels will break over time, so risk management is first and foremost at the top of your trading plan. So we don't use any of these tools just on their own, but they are they are helpful in planning your trade. So again, the first thing to see is to use them in a trending market. So as before, we can plot our simple trend line from our previous module. So plot your trend line, and you can see there obviously that the market is in an obvious uptrend. We have our rule with our couple of touches, and we have our Fibonacci numbers here. So we're using Fibonacci as as for support and resistance zones, and you can see just from plotting that simple tool onto your chart, we can already see support zones forming. Okay, so we have our first support of our trend line, and the trend line it's a valid trend line and it hasn't been broken, and again we can start to find support of our Fibonacci, especially at the 50%. Okay, so we can see our 50% zone here on our weekly USD JPY, and it's holding. Okay, so it's a valid trend line that's holding, and then the market breaks out and it finds support on the 38.2% fib line. It tries to break down, but again the full candle body stays above. Our trend line is still supported, so the market's still in a bull trend, and again it breaks through and we're still in our valid bull trend, and then it hits its resistance level there at the top. And we can see that the market has retraced. So as you can see, a very simple tool to just pop up. And again, we don't have to calculate any of these figures. You want to use it again for a high probability trade. So the higher probability is the market's in an uptrend, it's in a bull trend. Our Fibonacci numbers are being hit and supported. And this is remember, this is a weekly chart, so these levels are really holding. It's not a 5-minute or a half an hour chart. These are solid support levels if you're looking to buy into the market, especially at the 50%. Okay, so some of the more important numbers in an extension, in a Fibonacci extension. Remember, this is a Fibonacci extension. The market is extending up. So some of the most important ones will be the 38.2%, the 50%, the 61.8%, our 138.2%, and our 161.8% above the our level there. So these are important levels there, especially your 50% level. Okay, so you can see the support and resistance coming in as we go along. So just a simple rule is to use it. It works best in a trending market. So we have our uptrend and we have our Fibonacci numbers in our uptrend. Now we can look at our USD or our Euro USD and see how it will work in a downtrend. So we're looking to identify a swing low from the USD. So when plotting your Fibonacci, identify a swing low with a candlestick with at least two higher lows on both sides, right and left. Okay, so you're looking for two higher lows. So there we have a higher low, and just here we have a higher low. So we're going to plot our line down here of a bottom, but again we have our rule, we have our two higher lows below, so this will just help you form a valid Fibonacci line. And before you do that, we can plot our trend line again. Okay, and we can see quite easily that the market is in a downtrend. Okay, we have our rule, the 1, 2, 3, we've all our touches there, and the market, as you can see, you don't even need a trend line. We can see that the market is selling off. So we plot our Fibonacci retracement. Again, the extension is when the market is buying and it's bullish, and our retracement is when the market is selling off. So the market is retracing. So again, to get our exact figures, we see a top at high at 14.4. Well, it's close enough. It's only a couple. It's not even 1 point in it. So that's our top, and our bottom. And we have a close enough again. So you want the lines to line up exactly. Okay, it's not, once they're within a point or so, it's okay. You're looking for the levels here. So just you're plotting. You're looking for your swing low. So once you use your swing low rule, so to identify a swing low with a candlestick with at least two higher lows on both sides, like right and left, to plot your Fibonacci retracement. So again, working in a trending market, our downtrend, this is our weekly on our Euro USD. The market is trending down, and again, magically we can see how the Fibonacci retracement is working. Okay, so again, as I said, it's not 100%. We can see our 61.8% held, and it held, but then it broke down. So your risk management is always number one, as I said before, in your trading plan. It's just because the market held here, we're still testing resistance here. Always be aware that the levels can break. These aren't 100%, okay? And then when they break, an old adage in trading is support will become resistance. Okay, so the support broke at the 61.8%, and now it became resistance, and the market couldn't buy back, and then it fell into its 50%, and the 50% provided support, and then it broke down. Okay, so two indicators to show that we're still selling into the Euro USD. We've got our downtrend and we've got our Fibonacci retracement selling off, and the market can't buy back above these levels over a long period of time. Again, this is weekly, so our 61.8 didn't hold, our 50% didn't hold, and then we broke below our 38.2 all the way down. Okay, so the market's selling. Now, what are we doing next? For a high probability trade, the market bottomed out, and now it's coming back up to test the 23.6, and it's tested. How many times has it tested here? It's tested many times, probably a dozen times there, and the full body of the candle again never closed above. So for a change in trend, we're looking for this 23.6% to see if a candle can close above. And again, this is an indicator in real time and how it can work. But again, always use it with another tool. So a simple tool is your trend line. But it's quite obvious to see there that the market is not, it's finding resistance, solid weeks of resistance here at our 23.6. So a high probability trade would be to sell, to go short. So the market hits an exact level and it sells off. And this trade here, that's a good trade. Okay, you've got a high there at 11,447, and the market sold down to 11,009. Okay, that is a very nice trade. Okay, the market just spent the whole week just selling off, and we had a perfect entry on our 23.6% fib. So again, not 100% scientific proof that these will always work, but they will definitely give you a higher probability to enter a trade and a valid reason to enter a trade. As any trader, you need to trade your plan, okay? So whether it's the more getting up early and planning your day, or the day before, the night before you go to bed, you need to have your trade plan written down. You need to know exactly what you are planning to do. You're not going to just be buying and selling into the market as it chops and changes throughout the day. You need to have a valid trading plan before you enter any market, and you have to know what tools you're going to use, what tools have worked for you in the past, trend lines, Fibonacci's, Bollinger Bands, moving average. You need to know what you're going to use and how these work for you. So this is why it's so important to learn how to become a trader. And it takes some time, but once you have it, it's a skill for life, and it's a skill that you can learn. So this is why the modules are broken down piece by piece. Not one of these modules is too difficult. Anybody can learn it. It's about learning the modules, taking on the foundation, the basic, intermediate, and then the advanced course, and then putting these, they're not just theories, they're realities. You put them into practice day in, day out, and build your confidence, and you can see yourself how they will work and how you will go from being a novice trader to a full-time professional trader, and how that is achievable. But again, it's a step-by-step process. So this is the Fibonacci tool that we're covering, and again, as you can see, it will link in with your time frames, it will link in with your trends, and it will link in again with another tool. We'll just keep adding them on, the Fibonacci extension. So that basically is how we use our Fibonacci tool. I've given you a brief history of who Fibonacci was, where these numbers came from, and how they apply. So you don't need to go too deep into calculating them. You could do a thesis on Fibonacci, but we don't need to, okay? You need to find out the more important numbers, okay? So to summarize, the Fibonacci retracement, the most important numbers with the Fibonacci retracement are the 23.6, the 38.2, the 50%, and the 61 and 76.8%. Okay, they're the important numbers. Okay, and Fibonacci numbers are best used in a trending market and with other tools, again, such as your trend lines, and using valid support and resistance zones. Okay, and when you're using Fibonacci extensions, okay, the most important levels are your 38.2, your 50, your 61, your 100% when you're using your Fibonacci extensions. And again, the rule when you're plotting the Fibonacci, identify a swing low with a candlestick with at least two higher lows on both sides, left and right of itself. And when you're identifying a Fibonacci extension, identify a swing high with a candlestick with at least two lower highs on both sides, left and right of itself. Okay, so these, we're looking for profit in the market, and it's just a very simple tool, again, to know where to enter trades and when to take profit. Okay, so again, the market will never move in a straight line. We have a sell off the 61.8%, and the market tested, and it couldn't break back above, and then it hit support on the 50%. Okay, and it did buy back briefly before it sold off. So again, the market isn't just going to go from the top all the way down to the bottom. We're going to have little stairs up and down, okay? And these levels of support and resistance will just show us in real time what the market is doing. So it's found support, and we have our green candle, and we bought back, but only to a certain level, and then the market began to sell again. But the main thing is, once it broke below these Fibonacci levels, it never broke back above. Okay, it never broke back above, and it never broke back above the trend line. So we're in an obvious downtrend. So again, the main thing is to try and get in at significant areas. To try and get in the middle here, it's harder to time. But if you wait patiently, we can get in and out of the market, and we can get in and out safely. Okay, so we can see these zones to trade off. So this would be where we'd look to enter a trade if we're looking to sell it, and here would be where we're looking to take profit, okay? Or even if you wanted to take a small buying opportunity because you've seen the green candle, and you can use this as an entry level. But always realize, okay, you'd be trading in contrary to the major move in the market. Again, you can't trade up and down at all times in the market. The market is in constant flux, but the longer term trend and the higher probability trade would be for the market to sell off. So as you can see, solid reasons to buy and sell at these regions. And once the market broke below again, it consolidated for a while, but it never broke back above that 50%. A very solid zone to sell into. And again, we found support, and the support just broke through. Okay, so sometimes we'll find support and consolidate before it breaks down again, and sometimes it will go against. The market, it will never do this. It will never do exactly the same thing. But again, once it broke below, it never broke back above, and that was our 38.2% Fibonacci retracement. So that is our basic course module on Fibonacci extensions and retracements. So again, thank you very much for taking the time to listen to our module on Fibonacci numbers and retracements. And I will hope you will enjoy our next module, Module 8, which will be on the principles of fundamental analysis. So thank you very much, and goodbye.